Imagine this. You're sitting in a beautifully decorated conference room. The smell of freshly brewed coffee fills the air, and the sound of mingling voices buzzes softly around you. You're at one of those upscale investor events, round tables, sparkling brochures, and a charismatic speaker commanding the room. This isn't just any investment opportunity, it's the chance to get in on the ground floor of a booming housing development. The presenter shows you glossy slides of a planned housing community, charming streets, modern homes, parks where children can play, and even a community clubhouse. The pitch radiates confidence. The host talks about rising real estate values and the promise of incredible returns, well above anything the market is offering right now. But here's the twist. This isn't about buying houses. No, this is about becoming part of a limited partnership. For just $50,000, $100,000 or more, you could own a stake in the future. And as the crowd nods, inspired by the spreadsheets and polished diagrams, checks start to get written. It feels like a no-brainer. Real estate, after all, is the safest place to grow your money. But here's the awful truth. In this story, construction on that beautiful development never began. In fact, it never would. Weeks turned into months, and investors seeking updates were met with silence. Bank accounts associated with the project were emptied, and the charismatic mastermind? Gone, vanished. That dream of limitless potential wasn't an opportunity. It was an elaborate con. This real estate hustle isn't a new concept, but that's exactly why it works so well. Let's break down the mechanics of this scam. First, the criminals set the stage. They aren't advertising online or knocking on doors. No, they're hosting events designed to build trust and credibility. There might be ties to community organizations or even some lower-level local endorsements. Often these scammers will dress the part, sharp suits, warm smiles, experienced jargon. They know how to make you feel like you're in the company of successful and savvy professionals. Next, they dazzle you with visuals and statistics. Renderings of idyllic communities, perfectly tailored for middle-class families. The brochures almost make you smell the fresh paint in the houses that don't even exist. They'll talk about skyrocketing property prices and show manipulated charts that promise returns of 15%, 20%, or even more. Of course, they'll remind you, housing is always a safe bet. They use that universal rule of thumb to lower your guard, convincing you that this is just how the game is played. And then comes the brilliance of the limited partnership model. Most people understand buying property, houses, apartments, and office space. But limited partnerships? That's a whole other layer of complexity. You aren't buying a home, land, or even a physical asset. You're buying shared ownership of a hypothetical project that will allegedly generate profits once it's completed. Now, would an experienced real estate investor see red flags? Maybe. But scammers know their audience. They target people who are eager to diversify or just trying real estate for the first time. People who are smart, hardworking, and trusting, but not steeped in the finer points of development financing. The scammer's greatest weapon in this scheme is confusion. They overwhelm you with impressive-sounding legal terms and agreements, giving you just enough information to trust their pitch without enough expertise to question it properly. Once you've written the check, that's where the real scam begins. In most of these cases, the scammer uses your money to fund their lavish expenses, vacations, luxury cars, maybe even another flashy investor event to keep their scheme rolling. They'll string you along for a few weeks or even months, promising groundbreakings and construction permits any day now. They'll delay, dodge your questions, and eventually stop answering entirely. By the time you realize something isn't right, it's too late. The money is gone, and the office they once worked out of is empty. This isn't just a story of one bad developer. Cases like these are becoming more common as real estate continues to soar as a popular form of investment. Limited partnerships, REITs, equity crowdfunding for developments. These are legitimate tools for building wealth when they're done right. But the exact same mechanisms make them ripe for exploitation by con artists. And these scams aren't just dangerous for those directly involved. They undermine overall trust in the real estate market. When investors become cautious and weary, it slows down legitimate projects, reduces liquidity, and even impacts communities that depend on funding to thrive. So why does this matter now? Well, think about the current boom in real estate. Everyone wants in. Housing prices are skyrocketing, and there's constant chatter about finding ways to profit without actually buying a home yourself. Promoters know this, and they prey on the fear of missing out. They know how to craft offers that feel perfectly timed and impossible to turn down. That's why these scams are not just cautionary tales from the past. They are very real threats today. And if you aren't careful, you could be writing a check for your hard-earned money, thinking you're buying your piece of a golden future, when you're really just funding someone else's getaway. So how can you protect yourself? The first rule: if you don't fully understand how something works, step back and dig deeper. Real estate investments are complex, and relying on surface-level promises or fancy presentations is a dangerous game. Always seek professional advice before making any substantial financial decisions. Second, remember that returns above market rates almost always come with equal levels of risk, or, as in this case, no returns at all. Promises of guaranteed high yields? Consider those a bright red flag. Third, always verify the credibility of the project and promoter. Are there permits filed with the city? Who are the other stakeholders? Does this person or company have a track record of success that can be independently vetted? And when someone says this opportunity is only available now, don't let urgency push you into impulsive decisions. Scammers love pressure tactics because they know the less time you take to think, the easier you are to exploit. Finally, talk to people who know more than you do. Lawyers, real estate agents, financial advisors, they exist to help people navigate these waters with confidence. Yes, you'll spend a little extra time and money up front, but isn't that worth it to protect your savings? The truth is, scams like these thrive on hope. They promise dreams of financial security and a brighter future. They rely on your optimism to push past your questions. And while there's nothing wrong with chasing that dream, don't let it blind you to reality. Investing in real estate is a powerful way to secure your future, but it's also a world where due diligence isn't a suggestion, it's a necessity. So next time you're at a presentation, sipping coffee and listening to someone describe the next big project, remember, if something feels off, trust your gut. Success in real estate isn't about chasing quick returns. It's about making informed, deliberate decisions that stand the test of time. Stay smart, stay cautious, and invest wisely.